All across Canada right now, there's a high level of uncertainty when it comes to the real estate market. And of course, negative news travels faster and better than positive news. And so there's a huge doom and gloom scenario painted in the news media today. And what we try to do on this channel is cut through the data because there's not one sentiment that affects the entire market as a whole. Now, while there are certain parts of the market across Canada, such as places in GTA dropping way over 50%, Vancouver struggling with their sales in the condo market, and Toronto having a hard time with the pre-construction sales and also in the condo market. There are other parts of the market that are still doing really well across Canada, and on this channel we heavily focus, of course, on Calgary. Now in Calgary too, the benchmark price, of course, has been dropping for a couple months now. In times like these, what we can expect is that instead of a rising tide raising all boats, it's certain segments of the market that are significantly more valuable start showing up. And that's where we see the buyers going in. And as far as inventory piling up, new listings not being able to sell, those are generally in areas that are already not actually preferred by buyers in the first place. And it's only in really high selling panic years like the last 2 and 3 years in Calgary where those areas saw significant gains. And that is like northeast and east in Calgary. So of course, there's a huge amount of correction that's meant to happen there because those areas don't meet the expectations and lifestyle for the buyers that actually want to enter the Calgary real estate market. So now through this market update, what we're trying to do is essentially analyze the last market report that came out 10 days ago, but then also take a look at the data that I collect behind the scenes, not really available anywhere else. And that will give you a deep insight into each segment of the market. Of course, if you break it out by community, it's way too much to cover on this video. And if that's something you're interested in, then definitely reach out. But what we're going to take a look at is how the market is performing right now, halfway through the month. So we have our pulse on the market because a lot of things change from week to week, especially in a year like 2025. Before we get started, I have to let you know that I have a buyer guide and an extremely detailed 60-page community guide out in the description down below. So if that is something that can be extremely valuable for you, and I have got a lot of good raving reviews, especially for that community guide. It is something that I wish I had when I moved to Calgary because different parts of Calgary have a very different vibe, and it takes that approach in terms of trying to define for you what the lifestyle is, what a perfect fit might be for you and your family. And so that kind of information is very hard to find and it's not available anywhere else. And of course, I have put a lot of effort into doing that guide for you. And now a lot of buyers are benefiting from it. So if that's something that can be extremely valuable for you, make sure you get that from the description. And now, without further ado, let's get right into the data for this month. First, we're going to go through the summary by the Calgary Real Estate Board. I'm just going to go through the highlighted points as those are the ones that are most important. So as you can see here, there have been gains mostly occurring in the newer communities. There's high amounts of new construction happening right now. Inventory levels in July was 6,917 units, reaching levels that have not seen since prior to pandemic and higher than longer term trends. So now we have a lot of inventory building up in Calgary. However, things are shifting this month and that will show more in the next month, and you will see the data that I'm going to show you about that. The total residential benchmark price in Calgary has trended down over the past few months and is currently 4% below last year's peak. And now this has to be put in context where last 3 years, the property in Calgary have pretty much seen over 50% gains. I have also seen properties that have actually doubled in price. So in correction to that, of course, we expect the prices to come down and level out where we are not stuck in bidding wars all the time. The steepest price declines have occurred for apartment and row style homes, mostly in northeast and north districts. So this is in line with what I was telling you before. Those are the lesser appealing parts of the city that buyers really don't want to get into, which coincides with significant gains in new supply. Now, the rise in supply occurred in sales continued to slow and new listings have improved. 2,000 sales, so 2,099 sales, which is a 12% decline over last year. So last year, of course, sales were better than what we are seeing right now, while new listings actually reached 3,911. So that's over an 8% increase over last year. So overall, of course, the sentiment remains the same. more listings, more inventory, lesser sales. Now, since springtime is over, and with the mid-month market update, you will see how that is going to be shifting. In addition to the persistent economy uncertainty due to tariffs, sales, and new listings were impacted by no further reductions in lending rates and added competition from the new home market. Apartment style homes are reporting the highest months of supply with over 4 months, while both detached and semi detached homes are actually seeing conditions that remain relatively balanced at just about 3 months of supply. Now, personally, if you ask me, a balanced market is my favorite type of market because it doesn't favor one or the other. Now, of course, a lot of sellers, and this is what my buyers are telling me too, a lot of sellers still have unreasonable expectations in this market where they are overpricing properties, being stubborn on the price drops, and not really meeting buyers where they are at. And that has put more and more buyers off the market into the sidelines because they know there's going to be a point of capitulation when the sellers will eventually have to drop the price to match where the market sentiment is at. And at the same time, buyers have way more options and choice. They don't have to settle for a home that's 5 out of 10 in a bidding war. They can finally go for that home that's maybe a 12 out of 10, even better than their expectations, without simply overpaying, but also get ahead of the market because a lot of sellers are panicking in this market. And so where you can find good deals, you can get ahead of the market, get a good discount. So even if the prices are dropping, you are able to stay ahead of the market. Now, of course, this is not a market to rush into. You don't want to make any irrational decisions. In fact, it allows you to sit back, watch the market, and find a good deal and jump in when you feel ready. Now, taking a look at the benchmark pricing right here. So as you can see, 582,900, that is the overall benchmark price year over year. That's a 3.9% decline for Calgary overall. And month over month, that's a $3,300 decline. As far as detached prices go, we are at 761,800. So year over year, that's barely even 1%. But month over month, we have dropped by $2,500, which is not a whole lot. Duplex homes are actually going up. So we are at 697,500 because of certain parts of the city are doing really well for duplex homes. And they are in high demand, and they're that perfect in between where people are not able to afford the detached home anymore because it's gotten so expensive. But at the same time, people don't want to settle for a row town home because either it's too expensive and we're seeing huge corrections, but they also want that sense of having your own piece of land without paying condo fees and just having that same square footage that almost a detached home can provide you in most parts of the city. So now with more inventory coming in for duplex homes than what we've seen in the last 2 or 3 years, duplex homes are expected to do well. I don't know if this will sustain month over month, but as far as year over year numbers, they should remain pretty healthy. And for row townhomes, as you can see, we are at 446,000. That is crazy because I remember at a time just 2 or 3 years ago when this was just 300,000. Now it's so high. 3.9% decline year over year. Still not much compared to how much we've gone up. Month over month, we are at $4,100 decrease. And as far as apartments go, we are at 329,000, so that's a $3,900 decrease and 4.8% year over year. Now, when we take a look at the benchmark pricing by which part of the city you're looking at, as you can see, of course, Northwest is doing really well. We continue seeing an increase in about $400. As far as other parts of the city, we are mostly declining, and you can take a look at the benchmark price depending on where you're looking to buy. And of course, like we highlighted before, you can see Northeast, significant drop year over year, huge correction of 7.2%, and even East, 7.4%. Now, East is an area most people will not want to buy a home, especially people with growing families or just people looking to start a family. It's generally one of the higher crime areas. It has improved compared to where it used to be. There's opportunity for investors, but now that is again overhyped. A lot of lipstick investors came in trying to flip properties, and a lot of them got caught in between 2024 and 2025 where they thought they could make a quick buck, but the market took a turn and now they're trying to cash out. And so there's a lot of properties that are coming on that are infills or just basic renovations that have been flipped over the last 3 to 6 months. Now, taking a look at the benchmark pricing, I'm not going to go into detail, but if you're a buyer, it'll give you a good idea what the pricing is across the city. So if you look for a semi-detached, and depending on your price range, you know where you can afford, and etc. So you pick your property type, you pick what your price range is. If your price range doesn't fit the area that you actually ideally want to be in, then you can scale back down, or reach out and we will discuss when's the best time and see what the price drops might be in the coming months, and if we can get you into that segment of the market. Now, year over year price growth, this is for sellers. So this will give you an idea where you are in the market depending on what property type you're looking at. And of course, this is based on benchmark. Depending on what your specific property is, things could change. And as you can see, overall, right now, the only things in positive really is semi-detached. Detached has mostly declined when it comes to year over year price growth comparison. How are the sales doing? We hear across the board that sales are dropping dramatically. Last month we were at 2,286. We dropped a bit to 2,099. So of course, now we are coming off the spring market. Sales are expected to drop. Year over year, we have dropped 11.6%. How does that compare to longer term trends? And that's what's really important. So we often hear that people are comparing the market right now to the conditions that we had in 2019, as those were the most dire conditions where sellers were not able to sell, high amounts of months of inventory. But as you can see here, the sales right now are significantly more healthy than what we had in 2019. Of course, they are at par or right above longer term trends. And 2014 was also a bad year. That's when things really shifted. A lot of people overpaid for properties, and then we saw that decline. So now the question is, as we see this decline from 2023 to 2025, how long will this persist, and will we hit levels like this in the years to come? However, at the same time, now looking at 2025, as far as new listings go, you can see that we are at 3,911 listings. Last month, we were at 4,223. So of course, new listings are actually declining. And what that's going to mean is that the inventory is also going to correct. So a lot of people have this outdated perception, because that's how the last couple of 3 months have been, that inventory is just going to keep stacking up and they're going to wait till December to pick the best property. Well, what's going to happen since spring market's done, most of the kids are now enrolled into school. Generally 4 weeks after school starts is when we see a huge drop of sales and new listings, because that's when people just don't want to move. So now what's going to happen is, based on these new listings that are coming on the market for this month and what's left on the market, since the market is not competitive, buyers are going to pick the best properties they can find at the best price they can. And that's what the trend is going to be for the next 2 or 3 months, until we hit, I would say, October, November, when most of the good properties would be gone. And then you're either compromising on location or interior or price. So that would be, now given a year like this, price is probably not what you're compromising on. And what's going to end up happening is you're either going to compromise on location or you're going to compromise on the insides of the home. Not to say you can find a 10 on 10 home with a decent price, but you got to prioritize. This is the 3 factors that one of them, you got to prioritize 2 of them. Generally in a market like this, if you find the right opportunity, you can get all 3. And I would say next 2 or 3 months is probably that window when you can get ahead of the market, because sellers will be panicking since they're not able to sell. Get that good price in that location and get a 10 on 10 home. So you just got to prioritize what's more important to you. And as far as inventory goes, of course, like I said, inventory is going to start to decline. It's not dramatically showing right here, but it will show in the months to follow. So last month was 6,941. Now we are just at 6,917. So it's leveling out, and then it's going to drop a little bit with the best homes going first. Now, when we look at the total inventory, and this is why I say it's very different from 2019, because you can see while our inventory is pretty much at par with where we were at in 2019, and that's what people are using us to compare to 2019, but our sales are significantly more than 2019. So we are still absorbing that inventory way better, which is keeping us more in a balanced market. There will be parts of the market that will go into a strong buyer's market though. Now, as far as the months of supply go, like I said, we are still holding off in a balanced market at 3.3, which is very healthy and good for both buyers and sellers. So it forces sellers to price correctly, stage your home, put your efforts into marketing, not settle for the average agent, and do good marketing efforts. You need to go with an agent that can provide you the latest technologies to really push your home out there, not just in your local market, but also across Canada to market to other communities. So it's extremely, extremely important. So last month we were at 3.04 and now we are 3.3. Now, when you look at this, is a pretty scary stat that we are up 87% in terms of months of inventory, but I'm not surprised because what we had last year is completely not normal and we should never be in that kind of a market. No one should have to just see a home and put an offer within an hour. That puts buyers at a very huge disadvantage. So I actually personally like the market where it's at, and I would like a little bit more slowdown, in fact, so that sellers can be a bit more reasonable with the buyers, and buyers can find better opportunities and better fit for their family and are not forced into properties. Now, when we look at the months of supply, so as you can see right here, this is important to see how much inventory is available depending on which segment and part of the market you're looking at. So if you're looking at semi-detached, you're probably going to have the easiest time in the north versus you're going to have the hardest time in the south. And this generally then affects the price increases. So south will see a good amount of price increase if the sales there persist. If sales don't persist, then next month the stat will come up, which then releases and drops the price. So depending on which segment of the market you're at, where you're looking to get, you can see this and you can know how much pressure you can expect to face. However, you can see across the board, generally, pretty much every property type is really above 2 months, which is very, very good. Just a little bit of pressure on duplex in the south. And of course, the hottest time is for northeast on apartments. And I'm not surprised with the huge amounts of multifamily construction that we saw come up in the northeast, large amounts of areas being developed, and northeast overall is pretty high on this graph range. Now, this is a summary for the detached. I'm not going to go to read too much into this because we're already in the mid-month report. However, for each of these property types, if this is something that's relevant to you, feel free to pause the screen and read through it. You might find a lot of the similar information that we've already discussed before, but other than that, there might be some nuances here and there depending on which part of the market you're planning to get into, and you might find that valuable. Now, this is the data that I collect on my spreadsheets that I track on almost week-to-week basis, and it just helps us keep a pulse on the market for the market sentiment. One correction, so last time I showed this in my previous video, seems like one of the subscribers got this wrong. He thought I'm talking about sales just dramatically suddenly dropping in the last 2 weeks. That's not what this is. Sales, of course, have been dropping for the last 2 months now. What this really tracks is the magnitude. So the momentum in sentiment shift in the market, both on buyer and seller side. So as you can see, generally we expect this to fall off a lot slower as far as past markets go. But this year we dropped dramatically, which then reflects on inventory buildup and price corrections. Now, however, going into August, which the market report you would have seen before wouldn't have reflected, is that we are seeing things go back up. So that is good because this is where we expect the fall market. So fall market is where we see slight recovery. We don't hit levels like these. And we sustain this usually for, I would say, about a month, not more than that. And then we see a huge decline going into winter. Now, considering that we were not able to hold the spring market as long as we did, like last time 2 months, this time was just 2 weeks, and this is for detached properties. So what I expect is even these levels will not sustain for too long. A lot of the good properties, like I said, that are on the market now, since inventory is going to be declining, will get picked up. And after that, buyers that have now entered the sidelines, even from being active, will just wait till winter. Now, one of the things that will be really interesting to watch as we go forward is how lows do the lows go when it comes to winter? Because as you can see already here from past history, the sales that we normally see around the December time, and of course that is like the Christmas time, but even otherwise around November and Jan is pretty low as far as sales per day. So when the momentum drops that low in a regular market, or when the pessimism started filling in, I wonder if we will be sub 25 even for that part of the market. And then I think that's when you would really see then an inventory build up into next spring. And then if we don't have enough sales, that could really mean we have actually low. I mean, so opposite. So if you see lower sales next year, if this pessimism continues, and if you're not able to hit levels like this, then the inventory buildup will continue. So this would be an interesting part to watch. However, if sales are already hitting levels like this that we did for last fall, then I do expect a lot of that inventory is going to get absorbed and a lot of the good homes will go off the market. Now, continuing on to what I call the bigger picture, which allows you to see the impact of sentiment from one stat to another. So as far as price drops go, you can see all the way back from June. So this is 2.5 months. I try to look generally 2.5, 3 months at least, because that's a trend. You never look at just 1 month. 1 month can be a blip in the data. So right here, you can see the price drops have been consistently there. However, in July is when we started seeing more and more price drops for detached properties, as finally sellers have to capitulate and meet the buyers where they're at and agree on the price that the buyers are actually willing to pay, because a lot of sellers had unreasonable expectations, and I'm hearing this from buyers too, and that's their opinion in the market right now. So as far as detached selling above and below list price, then that will generally follow through with this trend. So as we see more price drops, then the sellers, then the buyers, guess what? They are like, yeah, we can probably offer even lower. And so you start seeing a saturation and an increase of the amount of people paying below list price. And so that's why I tell you it's important to price your property correctly as soon as you go on the market. Because if you stay on market for too long, or if you stay on market and then have to constantly drop your price to then get some interest, those buyers know that they can probably pay you even lesser, because by that time you are desperate. As far as detached days on market, that's consistently increasing, and that generally puts more pressure on these price drops. And then eventually what we are seeing as a result is a slow decrease in the price for detached properties. Now, this can be very intimidating when you first look at it. And so I'm going to explain this to you in a step-by-step process. So as you can see here, this is the past 3 months. So this one being May, this being June, and this being July. What this shows you is buyer and seller sentiment. And this is something I track on a numbers basis that helps me keep a close eye for when I can expect things to turn, shift, or find a good deal for the buyers that I currently have. So as you can see, seller sentiment has been shifting slowly. So we had 25% price drops in May. In June, we had 31% price drops, and that keeps increasing to 33%. So that's the trend for price drops. So we can continue that. We can see that continuing to increase. And as far as buyer sentiment, how are buyers reacting to this market? Are they paying above list price, below, or at par? So we can see as far as the above list price is consistently decreasing, even significantly actually. So it was 24% in May, then it dropped to 20%, and now only 16% of buyers actually paid above list price. Now, what's this? This is the combination of the two, which is very interesting, and this is how your negotiating power comes in. So for the amount of properties that saw price drops but sold above list price, that was 6% back in May. What was it for the last month? Only 3.74%. So that has significantly dropped. What does that mean? That means buyers are looking for great deals and significantly offering under list price because properties are still overpriced. So buyers and sellers haven't met eye just yet. And as far as properties that had price drops and still sold below list price, it was 90% already in May. So that's very high. So obviously they have still mispriced. And then in July, that still increases up to 91.95%. So that's very, very, very high. And As far as properties that thought they could increase their price, guess what? 100% of them still sold below this price. And as far as properties that just did no change, 22% in July sold above list price versus back in May, it was 31%. So that's an 8% drop. So, of course, you're still seeing extreme downward pressure on all fronts, no matter if you drop your price, you increase your price, or you don't change, or you pricing correctly is extremely important. Guess what? On my team, we have different strategies, and we've actually still been able to get bidding wars going in this market, and not because we've already overpriced the property. It's because we capture all the buyers of a particular market by pricing correctly, probably even a certain extent below its actual value. And what that does is then bring all the buyers that are interested, and we generally sell at a good price fast, and we allow the sellers to then move on without holding two mortgages, versus having to. So I've seen a lot of similar properties in the exact same areas then sit longer because they priced wrong to start with, and then what ends up happening, they sell below what we sold. So it is extremely important to price correctly in this market. Now, this is the semi-detached summary. So of course you can pause the screen and read through the details. I've highlighted the parts that are more important, but we're not going to read through this on the video. And now looking at the stats for duplex as far as sales per day. So as you can see, we had something very similar to detached in terms of we hit those highs right around here, but we were not able to sustain those levels. And then we dropped dramatically and very fast. Normally we expect it to come down, but over time. And then that quickly corrected back up here. So we're still not up to where we were in terms of last fall. However, I would expect maybe September we hit levels like this and then go back down for winter time. So because we have inventory, we have buyers, we have a lot of buyers going for duplex properties, this might still be a bit healthier than the other segments of the market. However, we'd have to wait and see, and then you can see where we can expect to be in terms of the sales momentum by winter time. So it's good to see this recovery. So duplex homes, I would say, it's generally always 4 weeks after back to school is when maximum buyers are willing to still buy. After that, most people have settled in and they push off their purchase for a later time. Now looking at the bigger picture stats for duplex homes, as you can see here, price drops still persistent and potentially even increasing a bit. And that then reflects in how much the properties are selling below this price. And that's probably to do with finally a lot of people capitulating and being willing to understand where the market's at with duplex properties. So definitely I would say there's good deals to be had for duplex style homes. And as far as days on market, that has been also increasing. It took a sudden uptick, I would say, in the last 1 month. So it's all these properties that had to sit on market for a long period of time, finally settling and taking that lower price. And as far as you can see, the overall average sold price over time for the trend line, it is coming down, although year over year benchmark price is still up. So this is the average price, and it's just going to reflect just where properties are selling at right now. But there's certain segments of the market that are doing extremely well, and that's why the benchmark price reflects higher. Now, when we take a look at the detailed stats, so back in May, as far as the amount of price drops that we had was 25%. And that has increased to 33% in June. And then in July, we were at 27%. So we saw a huge amount of price drops come in. Sellers were finally able to understand the value of the property and price it correctly and get those price drops in. And so probably we didn't need as much. And then that's reflecting in more buyers coming into the market for duplex homes. As far as buyer sentiment goes, so people paying above this price stayed consistent in May. Then in June, it was again 18%. And then now that dropped dramatically to 11%. So this reflects the huge amount of people we see paying below this price in the previous graph. And how does that reflect in terms of the negotiation power between these two? So let's see, price drops and people paying above this price is 6% back in May. So the amount of people that dropped their price but still managed to sell above this price was 6%. Now that dropped dramatically to 1.92. And of course, when you look at the price drops and people selling below list price, is 93% in May, 93% in June, and then July, that actually dropped to 88%. So what that means is the rest actually sold at list price. So whatever the sellers decided to then do their price drop and correction to was acceptable. I would say in this segment, sellers are being more reasonable. Now, the row style homes, this is a summary. You can pause the screen and read it if this is the segment that you're looking to get into. Taking a look at the mid-month stats, so as you can see, we still saw like a dramatic drop right here. It was in fact a lot more than detached and duplex homes. However, we saw a quick recovery in terms of the momentum of sales on a per day basis. And considering that the inventory has started leveling off overall, I would expect this to sustain, sales to sustain a little bit. I don't think we will hit the levels that we saw last fall at all. And that has generally been our issue this year. However, this will sustain for a little bit and then we'll hit the lows of winter time. So it's good to see some recovery in townhomes. And so sellers right now in townhomes, take advantage of this. This is your window. I would expect this only to last for the next 2 or 3 weeks. Make sure if you're priced wrong, do that price drop, price correctly, end up in more property searches and attract those buyers that are in the market right now. As far as an overall picture on the stats, as you can see here, this has pretty much leveled out in terms of the price drops happening, and amount of people paying below list price is still increasing. So while we're not seeing an increase in price drops as far as the magnitude goes, it's leveled out. We are seeing an increase in terms of the price drops, in terms of the people paying below list price. And that would be a result of this days on market consistently increasing. So sellers are feeling that pressure. And I'm telling you, you have to get off the market right now if you really need to sell your property. If you're okay with sitting on the market for a little bit, but you're stubborn on price, then okay, that's a different scenario. But I expect this to dramatically increase if this doesn't increase enough. Now, as far as sold price, you can see that's leveling out right about here for townhomes. And now taking a look at the detailed stats. So you can see in May, as far as the price drops went, we were at 32%. That stayed consistent in June, and that now increased in July at 37%. As far as buyer sentiment goes, 16% of properties were sold above list price in May. That dropped to 12% and stayed at 12% for July. But when it came to properties selling below list price, that's actually gone from 73% to 81% from May to July. So obviously, buyers are still looking for those deals in townhomes and are paying significantly below list price and try to get more and more discounts on those properties. And it seems like from the stats that they are actually able to do that, as there's a lot of inventory for townhomes right now. So as far as properties that saw a price drop and were able to sell above below list price was 86% in May. That increased to 92% and now has come down to 86%. So it seems like sellers are finally understanding in the townhome segment too on how to price their property or how to do the right price drops, and then finally be able to sell those properties either above list price or at par. The thing different from duplex homes, it seems like they're actually able to sell above after price drops. So that's a good thing because that means they're correcting it enough. And I expect this to continue, a lot of good deals in the next 2 weeks, like I said. And then after that point, you will pretty much stay on the market because I expect the sales to drop. Now, this is the summary for the apartments. So feel free to pause and take a look at it if this is the segment you're trying to get into. Now, to be completely honest, there's a lot of buyers that I have that were looking into apartments this time, and I've actually told them to hold off. Now, of course, depending on where you're looking to get into, there are very small pockets that I would maybe still advise you to get into, just because there's not that much availability for new buildings to come up. New constructions are not happening. Even future projects for in terms of applications for builds are not really happening. There's not much area. In that case, those values will sustain. Other areas are seeing rapid development construction still happening. Of course, they already got those permits a long time ago. They purchased that land, and now it's too late to back out because they've already done the foundation and everything. but they're seeing a huge drop in sales, and so pre-construction is having a big trouble. And talking about pre-construction, this is now like a public service announcement, which goes, we're seeing a lot of Ontario buyers reach out trying to sell their pre-construction condos that they probably bought last year, 2 years ago, 3 years ago. And it is crazy how much they paid. And all of this is coming to light now. And unfortunately, because they used Ontario realtors or tried to deal with the builders directly themselves, now without giving away any names, there are builders that we just don't recommend. And of course, that's why you work with a realtor, because we know all these things that happen over time and their reputation over time. And unfortunately, they way overpaid. Someone got a fat paycheck back in Ontario because these builders were offering them 6-8% on commissions, and these buyers, the price that they bought these properties are nowhere close to where the market value is, and so there's no way they can sell without taking a huge loss. And that's why it is extremely important to work with a local realtor who actually lives and breathes the local real estate, and don't just go off what your neighbor is telling you or listen to your barber. It's very, very important. It's unfortunate to see these people reach out and be surprised. I even had a scenario last year, without going too much into it, who thought they bought an apartment in Calgary and they were from Ontario. And then when they reached out and we went to actually look up the address, it was in Chestermere. It wasn't even in Calgary. And so they didn't know that till they had to take possession. And it's just, there's a lot that goes wrong when you buy properties across province from just using your local resources. So now looking into apartment sales per day, of course, as you can see, and this is the biggest highlight, this is sort of where the biggest problem in the Calgary real estate market is right now. We just don't have enough sales. Every other segment came close to reaching where we were at in terms of daily highs of last year. We've struggled to even maintain, reach those highs. And so that's why we didn't have a sharp drop like the others, because we didn't even reach those highs. So we're just pretty much trending sideways and even dropping now a little bit. And there seems no recovery when it comes to fall. And I'm not surprised. And so if you're someone looking for an apartment, let's work through where you're on your budget, because we might be able to get you into something else, depending on if you're aware of other areas or other features of the property. And if you're looking in specific segments, then there's very few segments that I would really recommend, or few communities I would recommend apartments right now. But generally, I'm warding people off apartments for now. I expect more corrections to happen. So as far as price drops go, you can see the price drops have been mostly trending sideways. Sellers are very stubborn, and I'm not surprised. A lot of these people are out of province buyers. Just they thought they could flip the property, or looking to get out, but they're stubborn on price. They don't have as much room to move, and therefore properties have been selling below this price. It's mostly, you can see the huge amount of saturation below this price, but again, there's not much room to move. And as far as days on market, it's trending sideways, and apartments being sold also trending sideways for the average. Now looking at the detailed stats, you can see the amount of price drops being very stubborn. So 38% in May, and in July we only have 39% price drop. So not much movement from the last 2 months. As far as buyer sentiment goes, in terms of people paying above this price, that has of course dropped from 6.74 to 4.72, because no one's feeling optimistic about apartments. And as far as people paying below this price, they're still trying to get more deals. So 85% back in May, which is already very high, but now it's 89%. So that will consistently increase as buyers try to underbid sellers and try to get them to drop their price. Because we can see here, as far as price drops back in May and still selling below this price was 92%. So that's the highest from all property types so far. And in July, that actually touched 96%. That is extremely high. So that's the highest we have across all property types right now. So of course, buyers are still trying to nudge and push sellers, because of course there's no reason to rush and buy if you don't need to, unless you get a good price. And so overall, where does that put us? Right now, we are in a very interesting market where having more detailed information and stats is extremely important. And that's why I say if you're looking to buy in the next, I would say 3, 6, 9, 12 months, reach out right now. Because what we can do is isolate the data down to the segment and areas that you're looking at. And that will give you better decision power going forward so that you are not just reacting to the market, but you're proactive and you know what's the right time for you to get into the market because there are a lot of good deals to be had. And especially if we can get you that 10 on 10 property, now is that time. Last 2 or 3 years, I saw a lot of buyers having to compromise. Of course, we tried our best to get them as many of those check boxes on their list as possible. But now's a great time to really find that long term home that you will be very, very happy with and get it at still a good price. And so, if you're looking anytime in the next 12-month window, reach out right now and we will set you up with a game plan. As far as the Calgary real estate goes and overall Canada's economy, there are a lot of changing factors. And of course, if you're interested in that and how things are going to affect the Calgary real estate market, subscribe to this channel because I am going to do videos on the economy, of course. And just to give you a quick glimpse of where we are headed as the unemployment rate across Canada, that's the big headlines right now at the time of release of this video, has ticked up significantly with 40,000 jobs lost. And now that's, of course, in comparison, which most people don't unpack, is the job gains that we saw last year. A lot of that was in public sector. The government was expanding at an unreasonable rate at the taxpayer money, and that's a whole separate issue. But right now, with 40,000 job losses across Canada, 16 or 17,000 of that is actually in Alberta, and a majority of that is among the youth. So overall, that is definitely going to affect the buying power of first-time home buyers going forward, but it's going to be more of a mid and long-term effect, as it anyways takes a long time to accumulate that amount of down payment that we need now. There's a stat where it takes about 25 to 30 years to even accumulate at the current rate of income, and that's just a whole thing to unpack. In the next video on this channel, we'll be unpacking all the economy data that is coming out. Take a look at Alberta's landscape, where it sits in the context of the economy overall for Canada, and what we can expect going forward and its impacts on the Calgary real estate market. And so if that kind of stuff is important to you and you will find that valuable, make sure you subscribe to this channel so that you receive notifications when videos like this come out. And if you're a buyer or seller in this market, again, definitely reach out and I would love to help you. And I'll see you guys in the next video. Till then, take care.